If you have spent any time in Portugal expat groups, you have seen this debate play out hundreds of times. Should I rent first or just buy? Renting is smarter. No. Buying builds equity. No, the market is too hot right now. No. You have to experience living there before you commit. And nobody ever answers it with actual numbers or actual law. Everyone has an opinion. Nobody has the data. In this episode, I am going to show you what Portuguese law actually says about Americans buying property, what the real costs are beyond the purchase price, what the rental market data actually shows for 2026, and what the U.S. Portugal Tax Treaty says about rental income from Portuguese property. By the end of this video, you will have everything you need to make this decision for your specific situation. Not someone else's opinion, your decision, based on verified facts. Quick note on how this channel works. Every claim you hear from me comes from a primary source: government documents, official statistics, treaty text, not travel blogs, not expat opinions, the actual law and the actual data. Every source is linked in the description. Go verify everything yourself. That is the whole point. And a note on what this episode is not. It is not a recommendation. I am not going to tell you to rent or to buy. That decision depends on your timeline, your financial situation, your tax picture, and your personal goals. What I can do is give you the accurate information to make that call yourself. So let's start with the most fundamental question. Can Americans legally buy property in Portugal? The answer is yes. And it is not just policy or tradition. It is written into the Portuguese Constitution itself. Article 15 of the Portuguese Constitution states that foreigners in Portugal enjoy the same rights and duties as Portuguese citizens. There are no nationality-based restrictions on property ownership. No quotas, no special permits, no approval process based on where you are from. Americans have exactly the same right to buy, own, sell, and rent property in Portugal as a Portuguese citizen does. The only administrative requirement is a NIF, the Portuguese Tax Identification Number, covered in Episode 2. If you have not watched that episode yet, the link is in the description. You need that NIF before you can sign any property contract. One important distinction before we go further. Buying property does not give you residency. You still need to go through the D7 visa process, but the right to own the property itself is constitutionally protected and completely open to Americans. That question is settled. Now let's talk about what the process actually looks like. Americans assume buying property in a foreign country means months of bureaucracy, multiple lawyers, multiple government offices, and enormous complexity. The reality in Portugal is more streamlined than you expect, and the Portuguese government built a service specifically to make it that way. But before you make an offer on any property, do this first. Go to predialonline.mj.pt. For €15, you can run an online check on any property's registration status, current ownership, any pending claims, any mortgages attached to it. Anyone can do this. No lawyer required, no office visit, no digital certificate, just a name and an email address. That €15 check could save you from purchasing a property with an undisclosed mortgage or ownership dispute attached to it. Do it before you sign anything. Once you are ready to move forward, the buying process in Portugal runs through a government service called Casa Pronta, which translates literally as ready home. At a single Casa Pronta appointment, you complete the entire purchase. The contract is signed, the property transfer tax is paid, the stamp duty is paid, the land registration is completed, and registration is immediate. You leave that appointment with a certified copy of the document and an access code to your permanent land registry certificate, showing your name as the owner. The service fee for a cash purchase is €375. For a purchase with mortgage financing, it is €700. Those are the government set fees. The taxes you pay at Casa Pronta are exactly the same as if you used a private lawyer or notary. Casa Pronta does not cost you more in taxes. It just handles everything in one place. Casa Pronta has national coverage. You can use any Casa Pronta service point in Portugal, regardless of where the property is located. You do not need to find a specific office in the town where the property sits. Now, what does all of this actually cost? Because the purchase price is only the beginning. Here's the section most articles skip entirely, or get wrong. The purchase price of a property in Portugal is not what you actually pay. There are taxes and fees on top that belong in your financial plan before you fall in love with a specific property. Let me give you the real numbers. There are 3 taxes and 2 fees you need to know about. Tax number 1, IMT, the property transfer tax. This is a one-time tax paid at closing. Most articles quote it as a simple flat percentage. The official Portuguese tax code tells a different story. There are multiple rate tables depending on your residency status and intended use of the property. For most Americans buying in Portugal, the relevant table is not the favorable primary residence table. That table, with its 0% rate on the first 106,000 euros, applies to Portuguese residents buying their main home. As an American buying before establishing Portuguese residency, you fall under a different table. The first 106,000 euros is taxed at 1%, not 0. Rates then scale from 2% up to 8%, depending on the purchase price. On a 300,000 euro property budget, approximately 10,500 euros in IMT. On a 500,000 euro property, approximately 31,500 euros. Tax number 2, stamp duty, flat rate of 0.8% on the purchase price. On that same 300,000 euro property, that is 2,400 euros. If you are financing with a Portuguese mortgage, there is an additional 0.6% stamp duty on the loan amount. Non-negotiable. Applies to every transaction. Tax number 3, IMI. This is not a one-time cost. This is your annual property tax, paid every year you own the property. The official Portuguese tax code sets the rate between 0.3% and 0.45% of your property's fiscal value. Each municipality sets its own rate within that range. Lisbon charges 0.3%. On a 300,000 euro property, that is approximately 900 euros per year, every year. 2 more things that most articles do not mention. First, if your property sits vacant for more than 1 year, the IMI rate is tripled. For Americans splitting time between Portugal and the United States, that is a real financial consideration. Second, if you are thinking about buying in Lisbon or Porto and renting short-term on Airbnb, municipalities can add up to a 100% surcharge on properties in urban pressure areas used for local accommodation. Both of those details are in the official Portuguese tax code. Both belong in your financial plan. Now, the number that changes everything for Americans specifically. According to INE Portugal, the National Statistics Institute, the national median property price hit 2,111 euros per square meter in the 3rd quarter of 2025. That sounds manageable, until you look at what foreign buyers actually paid. Foreign buyers paid a median of 2,889 euros per square meter, nearly 39% above the national median. In Lisbon, that gap was 61%. This is not Portugal charging foreigners more. It reflects where and what foreign buyers tend to purchase, but it means your budget calculation cannot be based on the national average. It needs to be based on what foreign buyers are actually paying in the areas you are considering. Put it all together. On a 300,000 euro cash purchase, Approximately 10,500 euros in IMT, 2,400 euros in stamp duty, 375 euro Casa Pronta fee. That is 13,275 euros in taxes and fees before any legal or agent costs. Budget 7% to 10% of your purchase price for taxes and fees combined. That number belongs in your spreadsheet before you start browsing listings. Now, the other side of the equation. What does renting actually cost in Portugal in 2026? Because this question has a very different answer depending on where you plan to live, and that gap is bigger than most content suggests. According to INE Portugal, the national median rent for new lease agreements in the first quarter of 2025 was €8.22 per square meter per month. That is the national picture. But Portugal is not one market, and the regional numbers tell a very different story. Lisbon specifically hit €16 per square meter, the highest in the country. National rents grew 10% year on year. The idea of retiring on $1,500 a month, dream that circulated online for years. That was Lisbon in 2019. That is not Lisbon in 2026. But here is what that same data shows about interior Portugal. Alentejo Central was the only region in the country where rents actually decreased. Towns like Évora, Bragança, Castelo Branco, a two-bedroom apartment for €500 a month is still findable. The dream is not dead. It just moved inland. The practical question for the rent versus buy decision is simple. If you are planning to live in Lisbon or the Algarve and rents are growing 10% per year, at what point does buying lock in your housing cost and stop the annual increases? That is a calculation worth running before you assume renting forever is the safer choice. One question that comes up constantly in expat groups: what happens to my property if my residency lapses? The answer is straightforward, but important enough to say clearly. Property ownership and residency are completely separate legal matters in Portugal. The Portuguese Constitution protects your property rights regardless of your residency status. If your D7 permit expires and is not renewed, your right to remain in Portugal is affected. Your property is not. You still own it. You can still sell it. You can still rent it. What does change is your tax status. If your residency lapses, you become a non-resident for Portuguese tax purposes. That means different tax rates on rental income the property generates and different IMT implications if you later buy additional property. The practical advice: begin your residence permit renewal 3 to 6 months before it expires. Permits expired more than 6 months require a full new application, not a simple renewal. Do not let it get that far. This is the section most Portugal property content skips entirely, and it is the one with the most financial consequences if you get it wrong. Article 6 of the U.S. Portugal Tax Treaty covers income from immovable property, which includes rental income. Here's what it actually says. Rental income from Portuguese property owned by a U.S. resident may be taxed in Portugal. That word "may" is doing a lot of work. It gives Portugal the right to tax your rental income, but it does not say exclusively. The United States taxes its citizens on worldwide income regardless of where it is earned. So, rental income from your Portuguese property goes on your U.S. tax return. Portugal also taxes it. What prevents true double taxation is the Foreign Tax Credit, IRS, Form 1116. You report the rental income on your U.S. return, pay U.S. tax on it, then claim a credit for the Portuguese tax already paid. The credit offsets what you owe the IRS dollar for dollar, up to the amount of foreign tax paid. It works, but it requires filing in both countries. understanding what qualifies as a deductible expense in each system, and knowing how the two interact. This is not something you figure out the first time you file after buying. Get a tax advisor who knows both systems before you buy, not after your first rental income arrives. Speaking of professional support, the legal and tax complexity of buying property in Portugal as an American is genuinely the area where expert guidance makes a material difference. One service worth knowing about is Expats Portugal. They work specifically with people making this move and offer integrated support across the whole process, including property transactions. Link is in the description. So, rent or buy? Here's the honest answer. There is no universal right answer, but there are 4 questions that will tell you the right answer for your specific situation. Question 1. What is your timeline? If you are planning to move within the next 12 months, buying before you arrive is extremely difficult. Coordinating a property purchase from the United States without local knowledge, without having lived in different neighborhoods, is a recipe for an expensive mistake. Rent first. Get settled. Learn where you actually want to be. Then buy with local knowledge. Question 2. What is your residency status? Buying before you have a Portuguese residence permit means you pay non-resident IMT rates, the higher table we covered earlier, and face stricter mortgage terms. Portuguese banks lend non-residents 60 to 70% of property value versus up to 90% for residents. Getting your D7 residency established first can save you thousands in taxes and improve your financing options significantly. Question 3. What does your tax situation look like? Rental income from a Portuguese property means filing in both countries. If you are not prepared for that complexity and the ongoing cost of professional tax preparation in 2 jurisdictions, factor that into the buy decision. It is not a reason not to buy. It is a reason to know what you are getting into before you sign. Question 4. What is your plan if life changes? Selling Portuguese property from the United States has its own set of complications: capital gains tax in Portugal, potential U.S. tax implications, currency exchange, finding the right agent from abroad. Make sure you have thought through the exit before you commit to the entry. If your answers to those 4 questions are, I have 18 months or more, I will have residency before I buy, I am prepared for dual country tax filing, and I have a clear exit plan, buying may make excellent financial sense, especially in markets where rents are growing 10% per year and buying locks in your housing cost permanently. If your answers are, I am moving in 6 months, I do not have residency yet, I have not thought about the tax filing, and I have not considered what happens if I need to sell, rent first. Get established, then revisit. Let me leave you with what I want you to actually take away from this episode. Americans have a constitutionally protected right to buy property in Portugal, the same rights as Portuguese citizens. The buying process is more streamlined than you expect. Casa Pronta handles everything in one appointment. The real cost of buying is 7 to 10% above the purchase price in taxes and fees. Budget for it before you fall in love with a listing. Foreign buyers pay nearly 40% above the national median price. Your budget needs to reflect that reality. Renting in Lisbon is expensive and getting more expensive. Interior Portugal is a genuinely different market. Rental income from Portuguese property is reportable to both Portugal and the IRS. Get qualified advice before the income arrives, not after. Every source used in this episode is linked in the description. The Portuguese Constitution, the official tax codes, INE Portugal housing data, the U.S. Portugal Tax Treaty, not summarized, linked. Go verify everything yourself. That is how this channel works. Next episode, we are tackling the question that affects every single American retirement plan, regardless of where you choose to live. What does Social Security actually pay you when you retire abroad. The real numbers from the Social Security Administration, not estimates, not guesses, the actual published data. If you are building your retirement income plan around Social Security, that episode belongs in your watch history before you make any decisions. Subscribe so you do not miss it. This is Next Chapter Abroad. Your retirement, your world. We will see you next time.